Thank you very much for joining me. Let me tell you something that should terrify every working person in this country and around the world. Right now, behind closed doors in Brussels, European leaders are doing something that Wall Street and the global financial elite never thought anyone would dare to do. They're about to cross a line that could shatter the entire international financial system as we know it. We're talking about $300 billion in frozen Russian sovereign assets. And the decision Europe is making right now isn't just about Ukraine or Russia. It's about whether any country's money is safe anymore in Western banks. And let me be crystal clear. What's happening in those closed meeting rooms with curtains drawn and phones collected will affect your retirement savings, your job security, and the future of your children. Because when the rules that have held the global economy together for 80 years start to crumble, it's not the billionaires who pay the price, it's you. It's working families. It's regular people who have no idea that the financial ground beneath their feet is about to crack wide open. If you want the truth that Wall Street and the corporate media are hiding from you, subscribe now, because what I'm about to show you is something they desperately don't want you to understand. Now, let me explain what this really means in terms you can understand. Imagine you go to your bank tomorrow morning and they tell you, we've frozen your savings account because we don't like your political views. And by the way, we're going to use the interest from your money to fund something you fundamentally oppose. You'd be outraged, right? You'd say that's theft. You'd say that's illegal. Well, that's exactly what Europe is considering doing to Russia's central bank reserves. 2 years ago, when Russia invaded Ukraine, Western nations froze $300 billion of Russian sovereign assets. It was supposed to be temporary, a symbolic punishment, a way to apply economic pressure without military confrontation. Nobody imagined it would last this long. Nobody planned for what comes next. But here's what they're not telling you on the evening news. That freeze has now mutated into something far more dangerous. European leaders desperate to fund Ukraine's collapsing budget without raising taxes on their own citizens or cutting domestic programs are now eyeing that $300 billion piggy bank they can smash open. But here's what they don't want you to know. Once you break the principle that sovereign reserves are untouchable, you've destroyed the very foundation of international finance. Here's the contradiction that should make your blood boil. Europe spent decades building its reputation as a neutral, trustworthy custodian of global wealth. They told countries around the world, store your reserves with us. We follow the rule of law. We're predictable. We're safe. And now they're about to throw all of that out the window because they painted themselves into a political corner. Ukraine's state budget is bleeding faster than foreign aid can fill it. European voters are exhausted and skeptical of endless commitments. And with Trump back in the White House introducing massive strategic uncertainty, Europe suddenly realizes they can't count on Washington anymore. So what do? They start looking at Russia's frozen assets and thinking maybe we can just use them. They call it a reparations-backed loan. They say they're not confiscating the money, just using the interest, just borrowing against it temporarily. But let me ask you something. How is that different from theft? If I take your wallet and say, I'm not stealing it, I'm just using the cash inside temporarily, would you accept that explanation? Of course not. But here's what really gets me. While working families in Europe struggle with inflation and stagnant wages, their leaders would rather raid Russia's piggy bank than tax the billionaires and corporations who've made record profits during this crisis. Let me give you the facts because the numbers don't lie. We're talking about $300 billion in Russian sovereign reserves, most of it held by Euroclear in Belgium. Ukraine faces a liquidity crisis by early 2026, according to every financial projection. Europe doesn't have the political unity or fiscal appetite to cover that gap through traditional aid. So European lawyers came up with this scheme. Don't confiscate the principal. Just take the interest or use the assets as collateral. They insist this isn't theft, isn't confiscation, isn't even appropriation. It's just a temporary measure, a clever workaround. I've been in politics for over 40 years. I was in Congress when we passed financial regulations after the 2008 crisis. I've seen Wall Street use this exact kind of language before. Sophisticated legal camouflage designed to make something illegal sound respectable. And I can tell you with absolute certainty, this is a political maneuver designed to achieve exactly what outright seizure would accomplish, only with thicker legal makeup. Belgium, the country hosting these reserves, is screaming warnings. Their officials say this loan will be struck down in court, that it exposes Brussels to billions in liability, that Russia will retaliate. But in the charged atmosphere of Brussels, caution sounds like obstruction and legality sounds like cowardice. And what came next was even more disturbing. Now here's what happened. The moment Moscow heard Europe was building financial mechanisms to use their reserves, the Kremlin didn't panic, they didn't rage, they calculated, and what they calculated should terrify every European corporation and every worker whose job depends on international trade. Russia holds an enormous advantage that almost no one in Europe wants to talk about publicly. Western corporations still possess nearly $1 trillion in assets inside the Russian Federation. We're talking about decades of investment in energy, infrastructure, manufacturing, retail finance, industrial, supply chains. Germany, France, the Netherlands, the United States, Finland each has companies with deep stakes in Russian markets. Factories, pipelines, real estate, logistical networks built over 30 years. Moscow had already tested small-scale retaliation, forced discounts on Western firms trying to exit, temporary nationalizations, capital controls, restricting profit repatriation. Those were warnings, not weapons. But now, with Brussels inching closer to monetizing frozen reserves, the Kremlin began preparing something entirely different. Systemic retaliation. Drafts of new legislation started circulating. Full nationalization of Western-owned assets. Forced transfers to Russian or BRICS-aligned investors. Windfall taxes rendering Western operations unprofitable overnight. Permanent restrictions trapping Western capital indefinitely. If you're a worker at a European company operating in Russia, your job just became a bargaining chip in a financial war you didn't start. If you've reached this point and want to keep fighting for truth and justice, subscribe and hit that notification bell because what's coming next reveals who's really pulling the strings. Here's where it gets even worse. Moscow's logic was brutally simple and devastatingly effective. If Europe weaponizes Russia's reserves, Russia will weaponize Europe's corporate presence. This isn't just about retaliation for retaliation's sake. This is about sending a message to the entire world. Russia wants to demonstrate to China, India, Saudi Arabia, the Gulf states, every emerging power that Western financial systems are no longer safe custodians of foreign wealth. And you know what? They're succeeding, because the moment news leaked that European policymakers were seriously considering using Russia's frozen reserves, the global financial system reacted with disbelief and dread. Central banks from Beijing to Riyadh convened emergency meetings. China's officials started evaluating exposure to Western custodians. India, the UAE, Qatar, even Turkey began quietly assessing their vulnerability. These aren't symbolic gestures, my friends. These are the first signs of a deep structural shift that will take years to fully unfold, but will be irreversible once it begins. Meanwhile, while families across Europe struggle with the cost of living, while working people can't afford health care or housing, their leaders are gambling the entire European economy on a legal trick they hope will avoid political backlash at home. And here's what almost nobody noticed about what was really happening behind the scenes. Let me tell you something about history, because I've lived through enough of it to recognize patterns. What Europe is doing right now isn't new. Throughout history, whenever empires and financial powers get desperate, they start bending their own rules. They start calling theft temporary utilization. They start calling confiscation legal restructuring. I watched this happen in 2008 when Wall Street crashed the global economy and then convinced governments to bail them out with taxpayer money. I've seen this playbook before. The powerful make reckless decisions and working people pay the price. For nearly 80 years, the international financial system has operated on one unwavering principle. Sovereign reserves are untouchable, regardless of conflict or political enmity. That principle built trust. That principle allowed global trade to flourish. That principle protected small nations from having their savings raided by larger powers. And now Europe, in a moment of desperation and political fear, is about to shatter that principle forever. forever. You know what? The most infuriating part is European leaders frame this as morally justified as helping Ukraine without imposing painful fiscal burdens at home. But let me ask you, why not tax the billionaires who've increased their wealth by trillions during this crisis? Why not close corporate tax loopholes? Why not make the ultra-wealthy finally pay their fair share instead of raiding another country's reserves and risking global financial chaos? Now, let me show you exactly where this is leading us, because the consequences are already unfolding before our eyes. The euro itself, the crown jewel of European monetary power, is seeing its credibility shaken. Its strength always rested on the perception of legal neutrality, the belief that Eurozone rules were predictable, fair, beyond political opportunism. But by blurring the line between freezing and using sovereign reserves, Europe has transformed its currency into something more volatile, more politically conditional, more fragile. Global investors are reevaluating euro-denominated holdings. Right now, financial circles are discussing questions that were unthinkable 6 months ago. Will European bonds require a new risk premium? Will foreign central banks begin gradual but significant diversification away from the euro? Will Europe's long-term borrowing costs rise as the world adjusts to a continent that no longer plays by its own rules? Meanwhile, BRICSN, Brazil, Russia, India, China, South Africa are accelerating work on alternative financial systems, commodity-linked payment mechanisms, new settlement infrastructures, parallel banking networks designed explicitly to reduce dependency on the dollar and euro. What had been a slow, cautious evolution has gained the momentum of a geopolitical tidal wave. And here's the greatest danger: the loss of Western neutrality. Once sovereign reserves become tools of geopolitical coercion, the moral claim that Western financial systems serve as global public goods crumbles completely. And now let me show you how this directly affects you and your family. So you might be asking, Bernie, why should I care about European finance and Russian reserves? How does this affect me? Let me make this crystal clear. If you have a retirement account, this affects you. If you work for a company that does international business, this affects you. If you care about the price of energy, food, manufactured goods, this affects you directly. When trust in the global financial system erodes, borrowing costs rise for everyone. That means higher interest rates on your mortgage, your car loan, your credit cards. When countries start pulling reserves out of Western banks, it creates instability that crashes through economies like a wrecking ball. Jobs disappear, supply chains break, prices spike, and it's not the billionaires who suffer. They've already moved their wealth to safe havens. It's working families who watch their savings evaporate and their opportunities vanish. I've met families across this country who are one medical emergency away from bankruptcy, who can't afford to send their kids to college, who work 2 jobs and still can't make ends meet, and now their leaders are playing Russian roulette with the global economy to avoid making tough political decisions at home. Europe's decision isn't just about Ukraine or Russia. It's about whether the international rules that have prevented financial chaos for decades still mean anything. And the answer we're getting is terrifying. Apparently, those rules only apply when it's convenient for the powerful. But the answer to all of this and what we can do about it is right here, right now. Here's the truth they don't want you to hear. Europe didn't leap across the red line. They drifted over it, inch by inch, carried by the gravitational pull of political necessity. After months of legal battles and infighting, Brussels settled on what they call a measured compromise. Instead of directly confiscating Russia's $300 billion, they decided to seize the interest generated by those funds. To European leaders, this felt elegant, reassuring, a way to help Ukraine while maintaining plausible deniability. But Moscow saw no such nuance. In the Kremlin's view, extracting interest from sovereign reserves is confiscation by another name. And so Russia retaliated not emotionally but with cold calculation. Western corporations woke up to punitive taxes, restricted capital flows, sudden legal interventions. Factories that operated in Russia for decades discovered they no longer controlled their own assets. Europe's compromise pleased no one and unnerved the world. By trying to balance moral duty with systemic caution, they demonstrated support for Ukraine. but at the cost of the very financial stability that made Europe influential to begin with. So what do we do now? We organize. We demand that our leaders stop gambling with global economic stability to avoid taxing billionaires. We fight for a foreign policy based on international law, not political convenience. We build a movement that says working people's security matters more than corporate profits and geopolitical games. If this video opened your eyes, hit that like button right now. Subscribe to this channel and turn on notifications because I'm going to keep telling you the truth that the corporate media won't. And here's my question for you. Has this kind of economic manipulation affected you or someone you know? What do you think we should do to change a system that protects the wealthy while putting working families at risk? Are you ready to fight for real justice and accountability? Leave your answer in the comments because I read them and your voice matters. Share this video with everyone who needs to understand what's really happening behind closed doors in Brussels, Washington, and Moscow. Because when we stand together, when we organize, when we demand better, we can change this. Thank you for watching, and let's keep fighting.